Hello, everyone, and welcome to this edition of Investing and Trading Live. I am your host, Josh Lilquist. Today is the 4th of October, which would be Wednesday, the third trading day of the week, third trading day of the month. And stocks we're in a slight hesitation area. Stocks have been continuing to slump through this week, or quite frankly, the last few weeks here since the beginning of, we'll call it September. And the markets yesterday had a big drop, especially the S&P 500, the Dow, and the NASDAQ as well, including the IWM. So that's what we're going to discuss here today is a market outlook with Sir Luke Young here today. Before I bring him on the show, I'll introduce him in a minute. I want to do a quick market update on current conditions. So it is currently 10:27 in the a.m. Central Time. Market's been open for about 2 hours. S&P 500 is at $422.79, which is the SPY ETF. We like to look at that. We have broken through that demand zone, and quite frankly, when we get Luke on the show, we'll get his outlook on potential demand zones that could be potentially quite a bit down further. That's your S&P 500, currently up on the day about $1.09. Dow Jones 330.12. Also actually up on the day, but ever so slightly, 0.04%. The Qs, which is the NASDAQ, is the leading performer of the day, currently at 357.73, 79 cents up, or 79%. Let me rephrase that. 0.79% on the day. And the IWM, rounding out the four major indexes, 170.29, down actually today, about 0.5%. So this one underperforming. This one's kind of been the underperformer of all the major indexes over the past several months here, but they all look the same. We have a high, we have a low, we have a lower high, and now we are creating lower lows, which is now creating a potential downtrend in the market, which is a phenomenal opportunity. And that's what I want to bring Luke on the show here today. But before we do that, there is risk in trading and investing. You can lose money at one point in your life. This is strictly for entertainment purposes only, mainly mine, but hopefully you find it entertaining as well. So Luke, how you doing today?
I'm good. Thanks for having me.
Yeah, I like having you on the show. It's been actually probably almost 2 weeks here now. I know we've been busy doing a lot of different things, and you've been trading a lot, doing different opportunities in the markets. But today I want to discuss a few things with these current bearish conditions in the market. And for those listening, bearish means down markets. We're seeing some pretty nice opportunities. Volatility is spiking up with the VIX. It's actually down a little bit today, but volatility spiked up to about $20.84. The VIX, which is currently now looking like it's in an uptrend, so which is actually the fear gauge of the market. And I know you got some things you want to talk about, your outlook in the market. Let's discuss your outlook, what you see potentially moving forward, and some of the opportunities that we might see in the next 6 to 12 weeks.
Yeah, I found a lot of opportunities throughout the market, just looking at it today even. And you mentioned the VIX, which is basically a gauge in the market which measures fear versus greed. So when the VIX is up, typically fear is up in the market, which transitions into the market falling. And right now we see the VIX in an uptrend, approaching, also coming back down to demand zone, to where you could see fear starting to spike again within the coming weeks.
You must be talking about a smaller time frame?
Like a 4 hour.
Okay.
4 hour to 1 day.
Got it.
But that's a pretty big signal to where, you can start taking this market short. And a lot of the sectors are following suit as well. Energy has broken out of its, massive uptrend it's been in, for months now.
Yeah, currently XLE was up to about $93, actually almost $94. And since the high of September 14th, we are down to $86 even, which is actually good for the pumps because USO and in oil has been basically doing that same thing. It hasn't taken as long. It's actually started a little bit late, but that'll help our prices at the pumps.
Right. And, that's a market we can look at shorting now because it has created not only a sideways trend, but it created a downtrend. So stocks within energy, massive stocks in that sector, Oxy, PXD, COP, VLO, Energy, a lot.
You sound
of
like a rapper.
I kind of am spitting some of these, but I mean, those are stocks you can look at shorting for great opportunity to the downside when the sector is backed up to that as well.
Mm-hmm.
And then another sector I was looking at too, the financial sector, which includes banks and hedge funds, that has created a downtrend.
Yeah, that actually respected a supply zone that it was created back in March of 2023. We probably talked about that several weeks back, and it respected that as coming off of that roughly about a 3-to-1 risk reward opportunity with that one. So that one, yeah, is starting. I wouldn't say it's necessarily a downtrend quite yet, but it's down definitely from the highs of $37 down to 32.
Yeah, and stocks within that would include companies like BlackRock, Goldman Sachs, Visa, MasterCard, American Express. So a lot of these times you can see stocks within these sectors follow suit as well with the same type of chart patterns. So look to the downside for some of those.
I like that. And when you're talking about shorting, just to explain that briefly for our listeners if they're new to the show and they don't know what that means.
Shorting, you're benefiting from I shouldn't say benefiting, you're profiting when a company's stock loses value. So you essentially short the stock, buy at a lower price. You don't really need to know exactly how it happens behind the scenes, just know it's a profit. You can do this in the option market by using puts.
Mm-hmm.
A lot of different things you can do, but taking advantage of the downside is pretty preeminent in this market.
Yeah, and we talk about supply and demand. That's how we invest and trade is based on, it's actually the economic law of supply and demand. And when prices are in demand, just like anything in our everyday life, prices should go up. I mean, that's the economic law. If prices are in supply, if there's a lot more sellers, prices should go down. So that's what we're identifying in the financial markets is where do we want to buy, but also in this case, if markets are in a downtrend, where do we want to short in the market to have that downside potential? And that's what a lot of people just don't know and understand because they're conditioned and told from a young age to go and buy and hold, and that's the only way to profit in the markets. Well, institutions, they set the rules, so I mean these rules are available to us as well, but if they don't tell us, it's like one of those things, they do as I say, they do as I say, not as I do. And they're doing something totally different in their portfolio. So what's the benefit of doing things by yourself?
A lot better than having someone else do it. That's, we were talking about that a few months ago too, Josh. We were talking about how, nothing against them, but money managers and financial advisors, they're basically just long the market. Mm-hmm. They tell you, they created a diversified, non-correlated portfolio for you. But what are they really doing? Are they long bonds and stocks? Because both are getting shelled right now.
Yeah.
So I can place a bet out there. A lot of people are down at least year to date with a financial advisor. And it's just kind of sad to see.
Yeah, and let's as you mentioned that, let's just look at the overall performance of the market. And
I already have that prepared. It's
oh, there you go.
The year to date, the past 365 days, the S&P is down 1.42%.
It's down in the year now, huh?
Not this year. I'm talking the past 365 days.
Oh, so year over year or 365 day running time. Okay.
So this year it probably says what? It's up like 10 to 9%.
Yeah, the S&P year to date actually, not the last 365, but year to date is up 10, almost exactly 10%. I'm looking at the SPX for that. But that just shows that if it's down the last 365 days, people haven't had any profits last year.
You want to know something crazy too? So I keep mentioning as well sectors.
Mm-hmm.
So over the past year, I'm going to just tell you the best performing sectors right now. So the highest performing sector in the past 365 days is energy.
That's why I would guess that, definitely, even though it's starting the downtrend.
Right. So it's up 19% as we talk right now. Technology follows suit at 13%.
You talking about the Qs, or what are you talking?
Technology, the sector.
Oh, got it. Okay.
I think it's XLK is the ETF, I believe.
Okay.
And then we go to kind of flat markets that are positive, like communication services and industrials, and then every other sector is negative.
Interesting.
Which is massive.
Yeah. I mean, you look at even the Dow Jones, which is a market people know about, year to date is actually down 0.4%. So these markets, they're not what people are hoping for them to be, and that's kind of the strategy for most people, is that hope strategy. And unfortunately, it's over time the rate of return it really dwindles down. So that being said, you mentioned some different sectors, and I like to follow gold and silver a lot. We talk about that on the show here. That's in one of our update, one of our market update symbols every single day when we do the market update. But gold, actually, and we were talking about this yesterday on our Discord channel, that it has been in a downtrend. Okay, and I don't know if you can see the chart that I have up here, but it is in a downtrend. Hopefully your eyes are good enough here. But we had a daily demand zone that it's actually coming off of right now, that it was created back in March of 23. Now, what are your thoughts on bigger term pictures or larger term time frames with supply and demand? I mean, if there is a downtrend, do you see larger time frame zones holding better than short term?
So the higher time frame you go, the more solidified those supply and demand zones are. Except looking at that chart, and I'm going to dumb this down to keep it in simple terms, when you have a downtrend, even if it's approaching demand, most of the time you'll see a small bounce, bouncing up to an area of supply to where you can look at shorting. So you would never actually take the opportunity going long because it's in a downtrend. So it's going to continue on until it breaks. And that demand zone is kind of just in the way. I like to reference, it's kind of like standing on railroad tracks when a freight train is coming at you.
That's interesting. You ever tried that?
No, I wouldn't try it, and I wouldn't try it in the markets. That's what a lot of people do also. It blows my mind, but although that price probably will hold at the moment, it's going to continue up for a relief rally is what we call it, to a supply zone where it's going to continue down. And if you want to stand in front of the train, please send us a video. But don't actually do it in real life.
Let's not encourage our listeners to do that. That's frowned upon, is what they say. So make sure we're not doing that. It's just like what Red Bull did. They said it gives you wings, and some silly person tried to jump off something saying it had wings, and they sued Red Bull for that. So make sure, be very intelligent with your decisions, especially if it could cause bodily harm. So that being said, there's different opportunities with the options market. Okay, now let's just say somebody wanted to buy a stock. Let's just say, in this example, let's just say someone has a longer term outlook on gold, and they want to buy gold at because currently the spot price of gold is at $1,823.93 currently. Let's just say they wanted to buy it at let's just say we're going to go to the GLD ETF. Okay, because that's where you would do the options on gold. And current price on GLD ETF is $169.12. What if somebody wanted to buy it at $168? Is there ways to buy it? Obviously, you can just buy it outright at $168. But what if somebody wanted the option to buy it, or the obligation to buy it at $168? Are there ways to get paid to do that?
Yeah, there's a term we call pay to wait. So the idea is just selling a put at that strike price you're willing to buy the stock at, and they pay you premium to where you basically profit if the market goes up, sideways, slightly down. So there's a lot of ways to win, and the one way you lose is if you get put the shares. But remember, you were a willing buyer at that price anyways.
Yep.
So you have to kind of map it out strategically to an area you actually would be willing to buy. You don't just go selling puts for the hell of it.
Yeah.
There's got to be reason behind it.
Yeah, and just in that example, I just pulled up an options chain. The 168s are paying $1.73 per share. So basically, what Luke is saying is there's an option strategy, and definitely learn this strategy and practice it before you even go attempt it. But because there's risk in everything that you do, because you would need a certain amount of money to cover for that. But that it'll pay you, and now it's at $1.72, so $1.72 per share. So if somebody wanted to do one contract, you're getting paid $175 to buy it at that price, even if you want it there anyway. So for example, say if somebody wanted to buy 20 contracts of that, the premium would pay the investor $3,500 to buy it where they would want to buy it anyway. Now, the drawdown with that is you would need $332,000 in your account to do that. So if someone doesn't have that, they definitely wouldn't want to do 20 contracts. But let's just say somebody had a smaller account and they wanted to do 5 contracts of that. They would only need $83,000 to do that. They're getting paid almost $1,000 to get paid to buy it where they wanted to buy it anyway. Another thing is, let's just say it doesn't get there, and that's their price that they're only willing to buy it at within that time frame. Let's just say it was on November 3rd on expiration date. On November 3rd, once that options expires, they keep that premium and they can just do it again. So there's strategies, almost like an income strategy, to wait for a price to come to you, which is a pretty cool strategy. So looks like you don't have any more comments on that, so we will move on to the next one here. All right, so
you're just looking at me. I should have said something.
Well, that's the benefit of being the host. You just got to see where the person is at, and if they're looking at TikTok or Instagram on their phone, you got to move on to the next topic. So,
well said.
There was a couple of stocks that we talked about, and I can just pull it up here. I have it noted on my chart here. One was UPS, and back. Oh, I thought I had it noted on here, but anyways, back probably 2 months ago, was it UPS when they decided they were going to pay their employees what was it?
170 G's.
170 G minimum. So basically, you said, hey, this stock is probably going to start to drop, and I think that was the beginning of June or July, or end of June or July, I think it was. And this stock is down roughly about 21% since you made that I don't want to call it a prediction, but you assessed the situation. So there is a slight demand zone down at the $120 mark. The price is currently at $153. Are you thinking, with this current downtrend, it has now broke this pivot where it's really touched 3 times here at $154? Do you see this going down to probably potentially to that demand zone?
Yeah, this is a very good opportunity to short. I was looking at this.
And by the way, don't just go short this just because we said this.
Right.
This is everything has risk in the markets. I hate I got to say that, but it's sad that you got to do it because people don't understand how to minimize their risk. But got to say that.
You also need a supply zone. But if you go back to, and I don't use this much, but if you guys have ever searched on like YouTube or any of those guys that study like chart patterns, this is what people call head and shoulders.
Okay.
So the idea, the stock makes a shoulder and then continues on to make, the head, which looks like a body, and then creates another shoulder.
Yep. So you're saying that one shoulder at 153, the head would be at 232, and the right side of the shoulder would be at 153 again?
Yep. And then to continue on for this pattern, it has to finish by dropping down, creating the body, the arm. Mm-hmm. And that brings you down to the 125, 120 range, which I think on this stock is a 20% fall, something around that
From
range.
where it's at right now?
Right. So if you find a supply zone in a downtrend and it's clear as day, remember, that's a great opportunity if you have a trade plan and know what you're doing. Risk small and there's high reward.
Mm-hmm. I like that. That was a good call that we talked about back in July or early August. All right. So that's UPS. Target. Now, what's your thought on Target? I've been talking about Target for a long time now. We've been waiting for price to get down to the $110 to $100 mark. What is your thoughts on Target? Because this one's been really struggling. Is this a retailer that's going to disappear?
Absolutely not. It's not going to disappear, at least to my knowledge. Massive company. The stock doesn't look great. Mm-hmm. pretty clear. But, at the moment, especially with what I was talking about this morning, I don't see, until an uptrend forms in these sectors, I don't see any opportunity to buy until an uptrend is formed on anything right now in the market.
Anything, huh? Okay.
I'm short as long as the sectors as well. As long as the sectors are creating lower lows and lower highs, I'm following those sectors. I'm not just going to get into the market until it's ready to bounce.
Got it. I want to talk about earnings real quick because a lot of people think good earnings is good, bad earnings is bad. And one in particular, we were talking about some options opportunities with Nike, I think it was the week of the last week in September, and it was offering some premium, but the risk was just not worth it because it had earnings coming up. Okay. And retailers were getting hit with theft and all this stuff, and earnings were rough on some people. But Nike came out with good earnings. It was on Thursday, the 28th of September. They were surprised 18 cents, which is up about 24%. So price gapped up from $89 all the way up to $99. So it gapped about $10. Now, that being good, quote unquote, good earnings, price has been dropping ever since it gapped up. Now, what are your thoughts on that? Does good earnings always mean good stock price and bad earnings always mean bad stock price? Absolutely
not. But we're trained to think, good up, bad down. But have you ever talked about the 33% rule on this?
Nope.
So any stock that has a stock price and trades on the stock market has a 33% correlation between three different things. I mean, there's a reason why price moves up or down. So one is the actual market. So, the S&P 500, what's the actual market doing? Is it up, down? That has a huge effect, a 33% weighted effect on what that stock's doing.
Okay.
The second rule is the sector that it's in. What's the sector doing? Is it outperforming the market, underperforming, or performing with? That has a 33% weight on the actual company.
So Nike would be in which sector?
I think Nike is in, I'm not sure.
They would probably be in the
industrial or retail. I'm not sure.
Yeah, I'm not exactly sure either. That'd be good, something good to research for the next show.
I got it on my scanning. But the last 33% weight is the actual company. So the company performance, what a lot of people don't realize, is actually only 33% weighted on their stock price. So if it goes up or down, I mean, it's not. You really have no idea which way it's going to move.
Yeah, Nike's actually in the consumer discretionary sector.
Right.
So for those.
And the ETF on that, Josh, I keep mentioning sectors. There's ETFs that you can view these on.
Yep.
What is it? XL.
Consumer. Oh gosh, what is it? That would be the it's.
So like energy is XLE.
It's
technology.
XLY.
Okay, so XLY is the sector ETF that you can look at. That include companies like Nike, Dick's Sporting Goods, all those.
Yep. So basically, that is kind of it's kind of mirroring it. Currently, consumer the XLY is at 159.26. It was at 177. So it is quite frankly dropping pretty bigly, as we like to say on the show, about 10%.
Right. But that 33% rule is pretty key to understand, especially when earnings comes around. You have no idea what direction it's going to go, even if you know there's good or bad earnings.
Exactly. That's why you got to really minimize your risk, especially in your short-term investments and trades during earnings season, because it can go up or down either way. There are strategies to use for that. In options, if you have like a high volatility, like a Netflix stock that are available, say 30, 60 days or whatever it is before the stock, that would be a straddle, right? Straddle. So there's straddles and strangles, different strategies in the market. So that being said, do you have any other stock that you want to cover before we close out the session here today?
I have what we were just talking about, earnings. Last week, FedEx came out with great earnings.
Okay.
I think, to the best of my knowledge, I think it was like record earnings.
Yeah, it was up 22%, 84 cents.
Yeah, and look at the stock, over the past week. So although earnings are good, it doesn't always reflect. We see this time and time again. The stock's down.
Yeah, well, the funny thing is it went up it gapped up right away, and it's been coming down from the highs of 270 down to 259 as of right now. So it really, you just don't know what it's going to do.
Right, and we saw it with NVIDIA too. Record earnings, gapped up to an all-time high, and now price is back down. People that don't know what they're doing probably held those positions thinking, they like this get-rich-quick idea, which, it doesn't happen in the markets. You got to know what you're doing. You got to understand how these things breathe and move.
Yep.
But I'm glad we brought that up.
Good.
But NVIDIA is something good to look at too, an opportunity in the microchip section.
Yep, got it. Yeah, and just kind of going back to the beginning of the session, markets were slowing down a little bit. Markets have shown are bringing some strength here now as we've been speaking here. So the current condition of the major indexes are all up. NASDAQ is up 1%. The Dow is up 0.2%, and this SP 500 is up 0.5%. The IWM is still lagging behind, is down 0.1% on the day. So we're seeing a little bit of strength here the past half an hour here in the market. So make sure to assess your risk accordingly, and happy trading out there. But thanks for everybody listening to the show. Make sure to smash the like button and the subscribe button wherever you listen to the podcast, Apple Podcasts, iHeartRadio, Spotify. What's pretty cool about Spotify is you can actually put comments in there. So if you don't like the show, send us a message and we'll see what we can do to make that better for you. If you do like the show, make sure to put a good comment in there. Thank Luke for coming on the show, because he's been begging to come on the show here for the last couple of days. So it's good to have him on. I appreciate your time here, Luke, today. As always, collect your profits when they're shown to you and protect your losses, keeping them small. Until next time, retire young, my friends.